Bollinger Bands here. Not they're obviously 2 standard deviations away from the 20 period moving average. But the Donchian channels are never that different to them, and it's interesting to see, isn't it, just how that works. So it's interesting to see, because they're completely and absolutely not calculated in the same way at all. Obviously there's quite a difference to the you know, this is very smooth and it's curved lines, and this is occasionally got chunks along them. But there's quite a difference, you know, to how they're calculated. If you just indulge me for a second, right, I can hide the price action itself here. So now there's actually no candles on the chart, and instead we've just got these 2 things here. You've got the Bollinger Bands and the Donchian channels. We'll just remove the Bollinger Bands as well, and we can see here, and I'll go up to a bigger time frame because we can put more data on the charts this way. We can see here that what we essentially have is a channel, is a channel, but instead of it being a channel, which is like the typical channel that we look to, and with these hard up and down edges, it's just calling it a channel in the sense of more like a river, you know, where, like, you know, the like, and that it's the upper and lower bounds of the prices, showing the kind of general speaking channel that the prices are operating within, and the top end and the lower end of it is determined by the look back period. Now, the look back period that I use for convenience sake, not for convenience sake, but for out of interest for you, is 26 on the Donchian channels. I can't remember what the out of the box ones are. I'm not too sure what the out of the box ones are, but I use 26. And the reason why I use 26 is because it also lines up with the you'll find that 26 is the period, is the distance. What am I trying to say here? 26 is the displacement. That's the word I was looking for, of the Ichimoku Cloud, and is also the period, the look back period for the baseline on the Ichimoku Cloud. So it helps in terms of just like when I'm flicking through the different things that I put on the charts from time to time, I like to have a 26 period Donchian channel, and I think the ones that come out of the box, the standard setting for it's maybe 20 periods, I think, on that, but I'm not too sure. The basis for this though is that you have that this is the lowest period within this chunk of time. There was a wick that came down at some at here, but we know, because this is where it started at. We know that this is where it started at, that the chances are that it was in it around about that area. This is where it happened at. Now, of course, then 26 periods will have gone past here. Is that right? Yeah. So 26 periods went by, and then the next low, because working back the way, at some point here, working back the way, going back 26 bars. Okay, there's 26 bars. So if I just take out this, if I just make this line up properly, hold on a second. In here, there was a wick that went down to this area. Over here, going back 26 bars, somewhere in this zone, there was a wick that went down 26 periods. Now, I know that it wasn't, that went down, that came down as low as this. Now, I know that it wasn't here, because this would extend out to the right. So I can actually be pretty sure that that at this point here, we saw a wick come down to here. Oh, did I draw that right? I think I was too far to the right, wasn't I? Yeah, we're too far to the right, but it's going to be like roughly here or here, right? You know, you can tell what I'm trying to do. So just for argument's sake. Now, where's the price action itself? Let me bring it back up. No, it's not that button. It's this button. Where is it? Sorry, I'm just trying to find the candles. The funny thing is when you hide the price action on the charts, it's actually annoyingly difficult to bring it back up again. Because, there you go. There it is. Right, there you have it. Okay, so I went one too far to the left. So you can see here, if I just remove this out of the way, that's where that wick went down to. And you can see here, this is actually where I wanted to have that. This is where that wick goes down to. Okay, and it lines up with this area over here. So in a 26 bar, looking forwards, you know, that must be 26 bars then this lines up with that low. So the 26 bar period look back. Richard, fine, that's 5 weeks in terms of traditional markets. It's just obviously 2 days shy of a February, but obviously a week shy of a regular month, really, in terms of the rest of the in terms of crypto. And you're looking back and you're saying, well, that's kind of the range, you know, that you're looking at over that point. Where I get it? Did I get it, Tony? Nice one. And yeah, standard is 20. Thanks so much, Jimmy. So so I use 26. And that's mostly essentially it. But you also have this median line. And what is this median line here? Well, this median line is the 50% between these 2 points. Okay, so to just hide that. No, don't hide that. Undo. We'll go to another random point. Oh, I'll hide the Donchian channels first. I'll go to a random point in the chart, like over here, okay? And we'll say this is a high here, and then 26 periods. So we're looking for between this point here and 26 periods going forwards in this zone here. Then you're going to have a high and a low in this zone here. Well, I can tell already that it's going to be this low and this high over here. So between this high here and this low over here, right? And then take away everything here. And show you the 50% point between those two areas is here. Oops. That's where the 50% line is between these two areas. And we're going to have a high here. And we're going to have a low here. Okay. So in this section right here, the baseline of the Donchian channels is going to be here. The top line of the Donchian channel is going to be there. The lower line of the Donchian channel is going to be there. In the period before this, the Donchian channels was lower, and in the period before this, the Donchian channels was higher, right? And also the baseline of the Ichimoku Cloud is also going to be there. So just bringing on the Ichimoku Cloud as it happens here, and zooming on in to the price action. Whoops. Zooming on into the price action. In that period there, what do we see? Well, what do we see? Style, baseline, purple. So this purple, I just made it white so you can see it. That white line there lines up perfectly with what we talked about. So that's where that is, right? Because that's how that one works. Okay. Which is one of the reasons why I've set my Donchian channels to be on 26 as well. Hiding that one for you and bringing up the channels again, you can see, boom, it's lining up with our 50%. There's our top, there's our bottom. We saw that it was ever so slightly higher. Now, of course, I was quite over the top with my look back, with my little drawing up the way here, because clearly this line is dominated by this here. Okay, it's dominated by that there, and then over here you can see that my sort of looking back the way one is more or less okay in terms of the upper side there, right? And that's this thing is constructed. Now you're going to notice a few key things here. Little ticks in the Donchian channels, like this little area here, could be indicative about something to happen. Just funnily enough, it frequently works out that way. Now exploring all of the nuanced reasons for why something like that might be the case is out with the scope of this discussion. But nevertheless, and it doesn't happen all the time. It doesn't happen all the time. I mean, it's, you're not seeing examples of it constantly, but just purely because that's there, and funnily enough, as we're talking about it, I noticed it, that's worth pointing out. As you can see, you don't see it happening all the time. This is the 12-hour time frame. Maybe if it's on the 1-hour time frame or something like that, it'd be more examples of it. But it's always curious just to be aware of the fact that if you see a little tick like this, that maybe that is because something has happened or is about to happen, and that something just to be aware of. No big deal, but it's there, is a thing. And the general concept with this is that you're looking for breaks of this. So a break of the lower side here or the upper side will dictate the trend for the next wee while going forwards. Okay, a break of this lower side here, which is at this point, this line just here, would dominate the trend going forward for the next wee while. Looking at this thing here, how many people are watching this right now, by the way? 11. That's cool. 11 people are getting the benefit of this. It's good. Yeah, so a break of this time frame here, I will see that we then had a period for the next wee while where we're dominated by that, and we can get sort of secondary look back on this thing by saying a secondary look at this again by showing us that as we broke down past this right at this point here, we're also breaking down past the cloud, and that's going to be a frequent occurrence for you. As you can see here, we broke past the top end of the Donchian channels as we broke through the cloud towards the top side. Again, looking up the way, we didn't break it here, and we didn't break the cloud, so it's like the opposite end of that. We did break it here, okay, but we didn't break the Donchian channel overall. So you got there's your combination of that one as well. So it depends. It's not always obviously in a heavily trending market, then this is going to be displaced. But in a period of sideways or a turnaround or whatever, then you might have something like that on the go. What's the best time frame to do it? It could be it's quite flexible again with that, but it could be, oh, nice to see you, Mexel dude. Nice to have you here. Nice to see you here. And so hi Sean, I have this and the Hangout open. That's quality that you guys are chilling out in multiple formats. So we've got this. So what am I saying here at this point? What's the best time frame to use it on? Well, typically, if you're looking for a trending move, you're looking for bigger time frame breaks, okay? Because you're talking about as with everything in a sense, you're looking for here's TradeSpawn with an answer. They're pretty good on all time frames, Sean. I use them as confirmation on the 30-minute with, say, a MACD strategy. But for trend analysis, you're looking at them on the 4-hour upwards. Yeah, absolutely. So for big trending moves, like here I am on the weekly, you're looking for it to break. If it breaks it, maybe Bitcoin, because of our sort of familiarity with Bitcoin, isn't even as good to look at. How about I just take up something completely, not random, but effectively random, like Barclays Bank here, right? So something completely out different. That what you're looking at is the weekly Barclays Bank and Donchian channels, and saying that, pardon me, that we're in a period here, for instance, in the middle of the screen where it's somewhat sideways. We've had downward price action with a V-shaped recovery. We moved sideways, we came down the way. We've put in what could conceivably be a higher low overall. Of course, as well, we've not put in any higher highs, and we didn't break that structure overall just there. Then we moved up the way and we went sideways. And it's at this point here where you're looking at it and saying, well, are we actually going to take the full advantage of that V-shaped recovery and break up the way or not? And at this point here, you're looking to see if we can break past the Donchian channels highs. And we know that it's that there's that in terms of what Jamie was talking about there, that in terms of the lower term timeframes, you can absolutely do that. But in terms of in terms of the bigger term timeframes, you can identify key support and resistance resistance areas even into the future. Just like makes it handy to draw them out like that and say, well, we need to get up past that. In terms of your chart, you can like look beyond that and say, well, we know where that came from as well. But also when we broke past this area here, we weren't breaking past that, and we didn't really break the channel. We didn't break the channel here. We came up and we tested it. Well, let me just get my language right. This is funny because I'm looking at a new chart effectively for me here. It was random. We came up the way, and all the way along we're kind of pushing the Donchian channel up, but none of it's really a break. What it's a break of is this area just here, and then we move towards the top side. So when you're looking at the price action at this point, up to this point here, then you're saying, oh, what could happen next? Oh, let me hide the Ichimoku Cloud. That's another reason why I'm getting distracted. Sorry, thanks. So you're looking at the price action at this point here, and you're saying, hey, look, we've had this period here. We didn't break the market structure. We didn't actually push up past all of that there, and we've got this red line. Are we going to move up and eventually break past this key area of resistance or not? Are we going to move towards the downside? We've had that V-shaped recovery. We've gone sideways since, and now we've dropped down. This could be that higher low that we're looking for or not. What are we going to do? I have an upward side and a downward side Donchian channel. If I break either of these, then I'm going to say at this point here that we're looking towards the next stage in the market. Then going over to the right, we did break past this point here, move towards the top side again, but we didn't actually then manage to continue to do so. And then when we came up to this point here, we put in a high, which then was able to look over to the right and say, well, we need to continue going up the way, and we haven't broken it. Now we've got and we can see that the lows have then all the way come up the way, and we didn't break this. We couldn't break this again. So then we moved down the way then thereafter, and it just gives you that impression. And what it always is essentially is the 20% look back period over there, a 26 bar look back period, and the median line of it. So you can find that your interaction is going to be in around about the 50% zone, and that makes sense because every time you come to this, what your likelihood is talking about is this line represents Dow theory over the period of the last month, okay, in terms of crypto and traditional. So in terms of Barclays here, what we're looking at is the 1 week chart. I just wanted to make bigger trending points of view, bigger trending points with regards to this. So for when we came up to this point here, and then we didn't come up and we didn't break it, that we're still within that range. We're still within that range here. We did push past that at that point, but we didn't actually manage to close up above it. So while the wick came up and pushed the Donchian channel up the way, as you can see here, that in these bodies, we didn't break this Donchian channel here. All of these bodies broke the previous one, and it was the bodies that are breaking it. Whereas what the wick will do is simply push the target further up. So you need the body to break it for you to continue up the way, okay? And that's the difference between saying that you're pushing past with your actual closes or going past the area of volatility which was sold back into before, i.e. buyers outdid the previous seller's strength, and that's what pushing up past there with the wick does, or with the body would do, as opposed to the wick. The wick just pushed the target higher and indicated that we'd not achieved anything by doing that. Then again, we pushed on down the way, and over here you can see the body comes down and it takes out it actually lines up with it perfectly, really, but it's right on there. And it's asking real questions about, are we breaking this towards the downside? So previously we were breaking it towards the top side. At this point here, are we breaking it towards the downside? Come back up the way. We can't take out our previous areas. Push on down. The bodies push it on down at that point there. Then moving on up the way, go past the middle line, get up, the body hit off of that one. We didn't actually push it up any higher than that thereafter. Came down, body pushed past the Donchian channel before, moved on up the way, going on up. Then we found at that point here, came down, we pushed in here and set in the lower end of the Donchian channels with our wick. Then a month later, we have a close during this week, which was lower than the Donchian channel. But all again, what you're really saying is that the sellers actually managed to push past the point at which the buyers recovered the price. The buyers recovered the price in here on 2 occasions, and then a month later the sellers actually pushed past here, giving us a break of the Donchian channels here, giving us a longer term potential move. And indeed then that gave you an opportunity to play that. And one way that you could have played it at the time, of course, is sort of in this instance it would have been a short, and you would have been saying, well, if we break past the median line of the if we break past the baseline of the thingy, then I'll stop out and I'm looking for whatever potential thing. So it turns out this was obviously a really big one, and that's like, you know, giving you a disgusting move towards the downside where you're getting hella profits. But you know, you could have gone for whatever type of move that you were happy to have there on the fact that your bodies broke past the previous wick. And the psychology there is that is like I'm saying, is that the in this instance the sellers actually managed to push past the point at which the buyers previously had come in to recover the prices and close it out and really break the channel at that point. Now you can do the same analysis on all time frames. Traditional folks will look towards this type of thing because they're looking for a trending move, okay? And in terms of like what we'd be looking at in terms of crypto and whatever else, we like to look for these sorts of trending moves on smaller time frames. Now you can still do the same thing obviously on these lower time frame charts, etc. But the key for this in terms of thinking about it from my point of view is to do with seeing the bodies pushing past the wicks of the previous area to provide you with a break, whereas a wick in and of itself, as we can see here, while we pushed past here and then here we had the bodies coming in, they weren't able to push past that zone, we weren't able to break this, and there was this area of resistance, you know, and that's just identified for you, and it's kind of comes into that category of the at a glance indicator, you know. So the Ichimoku Cloud, the Bollinger Bands, and the Donchian channels are three key examples of at a glance indicators, which will give you not only an idea about the trend, the current position of the prices, etc., but also the current positions of the prices in relation to where we last saw the real dynamics and the inflection of supply versus demand at key points in the past over the look back period, which you decide yourself. So handy ways of and as you know yourself from looking at the channel and that, I love the looking at the daily time frame for just making up, you know, your for just making stuff up, for kind of coming up with an opinion about where we are and where we stand at the time. As you can see here with this current example then with Barclays, and as you know, or well, you don't know, but I haven't looked at this Barclays chart for months. Here, this is just like, let's just discover this together. So we're at a point here where we had wicks coming in right here, and then we had wicks coming in right here, and you're saying I'm not ready to take a move off the back of this. This is not constituting a break of this area yet. We pulled back down the way, didn't see the prices coming all the way down as far as the baseline of this one, but then we came up, and on this candle here, what you're seeing, of course, then at that stage is the bodies closing out past that area, and you could say, well, okay, I'm ready to maybe take a move off the back of this one. And maybe what you could have done here, it says, well, if we come back in and retest that area, maybe I'll go for something like that. If we take out the wick of the previous candle, etc., or whatever. Now, going for things like 5-to-1 moves in terms of traditional markets is probably less advisable. I'm not a financial advisor. None of what I say is financial advice. However, it's perhaps less advisable than it is in crypto land. So maybe instead you might think along the lines of 2.5-to-1 or something like that in terms of your profit and loss, etc. And maybe you'd have thought to yourself, well, I'm going to manage my risk around about this sort of but that's actually quite a distance away, isn't it? That there. Whatever way you wanted to do it, you could have done it. Now again, as well, by the way, here's another one of these little sort of ticks that you see in the chart, where you get this little tick. It means that something has happened / something is about to happen. Just a little sort of tick for us here. So you get these little things, and we can see then that there was a little bit of like increased volatility in this section of price action. Volatility, by which I mean, you know, not only the ups but the downs as well. So we had 7% up with sort of 7-10% movements here during the daily time frame, and obviously that's fairly significant here for something that's from the world of traditionals, etc. And upwards we went thereafter, and like okay, so that's kind of the type of thing that you might look to. I'd never really look at things in anything in it, and you know, I you know me, I'm not a one indicator guy. that just trades off the back of one thing, but that would be a strategy of sorts that you could use to trade. Now, here's a couple of notes of points of interest. Here we saw the bodies here absolutely closing lower than the Donchian channels just here. Be aware that, of course, you're talking about it's that hard and fast rules are never really going to be that perfect for you. You probably wanted to come in here and try and find some other sort of indicator or indication to see how things were going. Looking at this area here, it's an overall upward trend. At that point, it had been trending down for some days, though, I suppose. Then we saw, well, the candle itself had a bit of a rejection wick on it, but that's nothing great. We didn't make it into the bullish bearish control zone. We again as well. I adjusted these for crypto. There would be 5 points up or down there or 5 points up for normal people in traditional markets. That would have been just touching off a rejection from the bearish control zone. What did we have in at the time? Oh, look, before. No. Look, well, actually, I mean, sorry. The implication being that you need to be right every time is stupid. Obviously, you would have got stopped out on a trade there at the break of this one. There you go, boo-hoo, no big deal. You wouldn't have necessarily got in on the candle where it actually happened anyway. You were looking for a pullback, so your entry would have been somewhere in this secondary candle here, and perhaps then, of course, then you would have stopped out with a nominal loss of under 1% or 2% or whatever overall, and being okay with it. Another little caveats as well is that we just had this bit where it had gone up and down again anyway, so we weren't really breaking it, and at that point. At this point here, although this green candle did, but this was a fucking green, sorry, excuse my language, this was a green candle. The prices gapped down then, obviously, to make this one, right? In this point in time, what was that, 28th of January? I can't be bothered looking it up to see if that was a Monday. Actually, no, 27th, 28th, no, obviously it wasn't a Monday. But clearly the gap, the prices, the trading ended here at this point, and then the next day the trading opened at this point down here, and it was green. Although there was an area where it was going down before and then it came back up again. So if you were actually trading this one here in terms of traditional markets, your exposure for pain would have been relatively limited anyway, by virtue of the fact of how this was structured. This wasn't a green candle, a red candle which closed down the way. The red candle which closed down the way actually didn't really take out the Donchian channels, apart from this, it took out this little bit of them, but it didn't take out what we've been looking at in the past. And there's all sorts of qualifiers that you'd be looking at for better moves than otherwise. Indeed as well. Likewise, I wouldn't be wanting to take a trade off the fact that off of this having beaten this dip in the thingy here, where our body beat this area just here. I mean, that's kind of brainless thinking about things like that. Instead, what you want to look for in terms of these things is the potential for increased volatility, perhaps as other brainless people make mistakes in the markets at that point, perhaps, as a way of looking at it. And there you have it, right? I mean, so let me just check in and see if there's anything else. Now, know how to use because that's the biggest breakdown you'll see of the Donchian channels, I think, anywhere in the world. There's probably other things that we could talk about in terms of them, but they're a relatively simply constructed indicator. It's more about what are the nuances of it, and I think I've described most of the nuances of it in terms of the implications of Dow theory, the 50% pullback area, the breaking past the highs before, how that works from a supply and demand point of view with the wicks and and as well its interaction with not only the Bollinger Bands we spoke about before in terms of their overall similarity, but the Ichimoku Cloud and anything else that perhaps you could be wanting to be interested in. That end part's not true. I didn't do it on anything else you could be interested in, but I did do it on the Bollinger Bands, and I did do it on Ichimoku Cloud, and there are plenty of other ways that you could be looking at things, for instance, with all these. So what did they say they were for? This would have been a good way of doing it, instead of just using it all off my own brain. Our 3 lines generating average calculations that comprise an indicator formed by an upper and lower band, mid-range. Well, anyway, formula for them is that indicator seeks to identify bullish and bearish extremes that favor reversals as well as breakouts, breakdowns, and emerging trends, higher and lower. Middle band simply computes the average between the highest and over the end periods and the lowest over end periods, identifying a median mean reversion price. How to calculate them. Center channel, what do they tell you? Donchian channels identify comparative relationships between current price and trading ranges over predetermined periods. The 3 values build a visual map over time similar to Bollinger Bands, indicating the extent of bullishness and bearishness for a chosen period. The top line identifies the extent of bullish energy, highlighting the highest price achieved for the period throughout the bull-bear conflict. The center line identifies the median or mean reversion price for the period, highlighting the middle ground achieved for the period through the bull-bear conflict. The bottom line identifies the extent of bearish energy, highlighting the lowest price, blah blah. In this example, Donchian Channels shaded area, blah blah. As the price moves up to the size point last 20 days or more, the price bars push the green line higher, and as price goes down to its lowest point 20 days or more. By the way, I also think that having it slightly longer than 20 days is advisable, as well as it matching up with the Ichimoku Cloud. I could demonstrated that slightly with the Barclays chat there now. That if you had based it on 20 days, you would have got more false signals, whereas basing it over 100 days would make it useless. You know, so where's that sweet point for me? It's just past 20, whatever. The push to the red line. When prices decrease for 20 days from a high, the green line will be horizontal, start dropping. The difference between Donchian Channels and Bollinger. Okay, so in my opinion, that article there is completely and absolutely outright useless. And yeah, I can at least rest happy knowing that this that my explanation is probably the best one that's out there on the internet. Probably, even though it is a relatively simple indicator, and that I'm pretty confident I've probably just given it the best. And I don't know. I don't want to blow smoke up my own arse. You know, I don't want to blow smoke up my own arse, but I'm pretty confident. Now, could you type the notes on the chart so I can replay and type on my chart? Says Sean. Yeah, let's just check in with the chat and then I'll go. It's pretty late, obviously. I think it's bedtime for all of us now at this stage.